These Nvidia whales are about to print tomorrow. You can see all of this premium, 2.7 million, 2.7 million, 3.5 million, 840,000, 2.9 million, and 2.7 million. All of these were put sell orders for around the money strikes for only the March 28th expiration. If you don't know what that means, essentially these guys are betting that Nvidia wouldn't really move as much as expected from earnings, which by the way, implied post earnings move was plus or minus 8.5%. And look at this over here. Nvidia is only up 1.5% after hours. So these guys are going to get paid tomorrow. Their goal is to collect the premium on these contracts, or at least a large sum of it. And really, this was incredibly well done by them because in this case here, by selling the premium to open, which is what they did, they're able to profit with a flat or up earnings move. Even if it were to drop a couple percent, they would still profit off of this just because the implied volatility was so high headed into this earnings. So because it was a nothing burger, because Nvidia didn't move that much, these guys are going to get paid. And this is why we're always looking for orders like this, because this was super unusual throughout the day. And one thing I do want to note with this, just so you're aware in the future, because we'll continue to see prints like this as time goes on, make sure you pay attention to, well, one, continuous prints, because these are all one after the other in this case. Two, a ton of premium. You're looking at about 10 million plus in overall premium here. And then three, these were all sold to open. The way that we know that is because the volume over here is over the existing open interest of these orders. You also can check if you want to do like a secondary check, you can go to the order details over here and you can look at where the majority of these prints came in. You can see a majority were both at the bid and below the bid. So both of those mean that they were selling, as well as if you look at the implied volatility over here, the IVOL, you'll see the first one was 63.47%. If they were selling these to open, generally speaking, you want to see each of these go down in implied volatility. In this case here, you can see 63.3%. And as we go up, it'll continue to be the case over here, 62.85%. So these were sold to open. These guys are going to get paid tomorrow, like I said. So beautiful trade set up by them. As for the future of Nvidia in the market, that's what I want to get into here in this video. First of all, Nvidia, critical level. We spoke about this on that Sunday video all the way back at the beginning of February. It retested this trend line right here. If you're unfamiliar where that started over here on April 19th. You can see the original pivot there. The first pivot that it tested was this August 5th low. And then we just recently retested it over here on February 3rd. So as long as we remain above this trend line here, this is the uptrend, by the way, then we'll continue to trend up as the word implies. So in this case, we do want to continue to see it stay above, and it is likely to stay above, especially after earnings is up just a bit right now. My second level that I'm looking at is still the same as before from this circle. If you remember in the previous video that we did, I want to see it get back within this range up here. You can see between the green box, both of these green boxes, this is the previous range we were stuck within. We're below it at the moment. We rejected it. We never had a daily close back within the range as of last week. So we rejected off of that. And now it seems like there's potential we retest it again. If we can get back above roughly 141-ish, get back within the range, you're looking at a potential for all-time highs after. So this is where the trade setup is, not down here. The next trade setup you could consider to be down here if it were to drop for whatever reason back to the uptrend. But realistically, you're looking at both over here on top of the break or down here for a dip buy. As long as it stays in between, in the middle, I'm not interested in trading that. If you're a scalper, then hats off to you. You can probably scalp. But as a swing trader, I'm looking for the trend setups. And this is not providing a trend setup until it gets over this or it's able to retest this. Both of those viable for longs. And I will not go short until this uptrend breaks. So that's my plan for Nvidia. As for the S&P 500, we did see a breakdown last week, which I mentioned in the weekly video, of the pennant pattern that we had before. And right now we're back within this channel over here. So you can see the two blue lines. I know I have a lot of green lines. Those are just pivots. Pay attention to the blue lines here. We're back within this channel. We retested it yesterday, the lower end at this 590.50 pivot. And realistically, as long as we can stay above 590.50, I can see this continuing a lot higher, all the way back up to 602.70. Unfortunately for swing traders such as myself, we are still range bound. We've been range bound now since the beginning of December, believe it or not. And because of that, there hasn't really been any opportunity for a trend setup. The plus, though, is once this range breaks, whenever it decides to break, there's going to be a massive trend move that occurs either to the downside or to the upside. So definitely mark levels like 580.92 and 610.72 on your chart, because once one of these breaks, we will see that trend move occur. And again, it's going to be a very large trend move because all of this is essentially acting as a coiling spring, which I referenced in our last video. And you can see from up here, whenever you have a coiling spring, it's building up energy until it decides to break. And when it breaks, it continues for a very long time. And again, that can result in either direction. The preference, of course, would be to the bull side, but I need to see that confirmation first, which would entail above 610.72, like I said. So until that happens, you're looking at scalping the range. Personally, this 590.50 pivot has worked wonders. You can see numerous times act as support, as of recently acted as support as well. So this is a great not only level for an entry, but also for risk, because we know if it goes under this on an hourly close and especially a daily close, we're looking at a lot lower price discovery, probably all the way down to 580.92. As long as it stays above, we can see that continuation higher, ideally to like 602.70, because I have a pivot over there, or the upper end of this channel that it's stuck within right now. So that's my plan. Use this as risk, use 590.50 as my risk level for a long setup, and I can trade it on the way up. And until it can get above 610.72, don't go for that moonshot setup just because it's going to continue to chop in between. And we're never going to know when it's ready to break until it does. So that's my personal plan. And the flow kind of backs that indecisive viewpoint as well in terms of when the market's ready to break out. You can see even just from today, there was some hedging, but then there was also some bullish bets. So it's kind of both sides. You can see this put order up here, 3.3 million for the 590 strike, 320 expiration. There was other ones over here. These were hedges going into earnings just because of the strike. You can see very far out the money with not that much time overall. Both of these pretty hefty orders, and then some other puts here, and then some put sells overall. So a lot of indecision in the tape. And one of the funniest ones, by the way, that we saw earlier today was a $1.8 million 750 strike, which is incredible. Yes, this expires in 1 year from now, but still 1 year is pretty short duration considering the 750 strike. That's very far out the money. Even if price were to appreciate nicely going into next year, this is super far out the money. They're gonna have to worry about some of the Greeks as time goes on. So a pretty incredible print in this case here. And we'll see tomorrow what the open interest is to see if they did end up buying this to open. If it was about to open, which it seems like so far, then this should be around 20,000 plus in the open interest. If they did sell it and for whatever reason it came through above the ask because of what the spread was, then we'll know by tomorrow morning because that open interest will reduce quite a bit. And the reason I bring that up is because the volume is mostly in line with open interest here. So there's that potential that this was sold to open. We'll know by tomorrow, like I said, just based on the open. So again, going back to the general flow, it's been very indecisive so far. So we haven't seen anything pointing to what direction that trend move might be. So at the moment, it looks like we're going to have to continue to do these scalp trade setups. And still, it's like a 10-point range from around here. And if it breaks back above, you're looking at another 10 plus points to the upside. So pretty wide range. But again, we're not looking at what we saw previously, like back in 2024, where it was just consistent trend to the upside. Right now is just a lot of chop, and we'll have to make do with that until it's ready to break. Regardless, as always, appreciate you guys watching this video. I'll see you next time.